G'day folks, Jim here from FX Charts, Monday the 20th of January. Thanks for tuning in. Well, the dollar finished on a reasonably firm note last week. The data was a little bit mixed, but the industrial production showed continued growth, rising for the fifth successive month. And I think there's a good chance we may see the US dollar find some legs later in the week, although it could be a little bit range bound for the time being. It's Martin Luther King holiday today in the States, and there's not an awful lot of data out this week. We've got the Economic Forum in Davos later in the week too, so there'll be plenty of statements coming out from that. But as far as this day is concerned, the German PPI is really the European highlight. Before then, though, we've got a fair bit of Chinese data headlined by the GDP. We've also got retail sales and industrial production. So that could provide some interest in the Aussie. But we'll go and have a look at the charts. And the euro, as we can see, the euro finally broke down from the rising trend line that we saw, we were watching late last week. Came down here, hit the FIBO support at 135.25, has bounced off it, is opening just a little bit above it in early Asia. But I don't think today is going to be really a day to do too much. There's support going back here to early November down around this level. So in the absence of any real drivers out of Europe or the States, I don't really see too much action. Having said that, the 4 hourlies are pointing lower, and I prefer to be a buyer of dollars. And the dailies also look as though we're going to possibly head lower in the days to come. Now we had a significant break really on Friday, closing down below the 100-day moving average. Now we haven't done that since September, and we haven't really had any real action down below the 100-day moving average since really June, July last year. So it could be quite significant. And if we do head lower, we're going to see some good support down around 134.5, and a break of there would take us really down to sort of 134 and possibly lower. Don't really see that at this point in time. But I do think the direction is downwards, and I prefer to sell a rally really up to around this 136 area. Don't think we're going too much above there. But if we do, we've got to leave room to sell it up around 136.5. Dollar yen. Well, dollar yen did nothing on Friday, and that could well be the case until later in the week. On Thursday, we've got the BOJ meeting, and in the meantime, the Prime Minister Abe will be speaking at the Davos Economic Forum. But I think between now and then, dollar yen is possibly confined to 104, 105 largely. Although once again, I prefer the downside, and I think the crosses, the euro yen, a particular Swiss yen, look heavy to me. So if we can break down below sort of 104, and there's going to be good support down around there. The daily Kijun and Tenkan are crossing over there. This is just a 1 hour chart, but we could come back down here, as I say, 104, a break below there. Well, we need to go a little bit further out, really. A break below 104 will take us down to sort of this 103.50 level. Although on the daily charts, as I'll show you in a minute, there's going to be some decent support around 103.75. But if we go below 103.5, then we're heading back towards last week's low at 102.85. On the daily charts, though, there's this top here at 103.70. That did provide a very strong resistance really for quite a while we were forming this triangle here. So I would imagine that will provide. I know we had the spike down below it last week, but I think there'll probably be some good bids there. Once that is broken, though, I think we're probably heading towards 102.85. And in the shorter term, above, I'd be surprised to see it much above this 104.90, 105 area. And for the time being, I really don't think we're going much above 105.25. So that's about it. If we do see it up there, then I think we'll probably we're looking to sell rallies. Cable, that had a good day at the office on Friday. I'll just show you a 1 hourly chart. Rallied strongly after the UK retail sales. Came back off a bit, but it's holding above 104, and it may well continue to do so for the time being. The 4 hour charts are actually quite positive, but I don't think, with the euro looking heavy, I don't think we're going really above this sort of 164.5. If we got, I'd be a seller up to about 165 with a stop loss placed above 165.20. Dollar Swiss, well, that's looking all right to me. As I said last week, you know, we put out a buy recommendation at 90.5, and it's looking okay at the moment. Nothing very flash, but it's looking okay. Now we might consolidate here for the coming session, but the 4-hourly charts are beginning to look as though they might have some upside momentum, and we've broken this rising trend resistance. We really need to get above 91 sort of 2025 area to have any real enthusiasm though. But if we get above there, look for a run up to sort of 91.5, and above there really isn't probably much until 92 the figure. So the dailies, they look as though they're building positive momentum as well. So as I say, I prefer to be a buyer on dips, and I'm looking for a run. The 38.2 is at 92 the figure, and then the 200-day moving average up around 92.30. So if we went back below this rising trend support now around 90.50, then I'd be a little bit dubious, and we're probably headed back to the FIBO support at the pivot at 90.20. Until we do that, I prefer to be a buy on dips. I'll probably have a stop loss down around just below here, though, around 90.30, 90.20, something like that. Aussie, as I say, we got the Chinese data out today, and the Aussie does look heavy. But as I've said before, let me just go to the dailies here. We're coming into some pretty good support down around here. The bottom of the major channel is at sort of 97.30, and under here, although that's a bit of a way yet, we're 86.30. I beg your pardon. Is the previous long-term low that we should be looking at. Having said that, the dailies are pointing lower, so maybe a weak Chinese number will see me wrong and will take out this support. But in the meantime, I'd be squaring up shorts and looking for a bit of a bounce to sell into. Let's just blow that up. The short-term resistance, it looks to me as though 88.60 is a level to watch, but before then, the Aussies really finding it pretty hard to get above 88.20. So the 4-hourly charts are a bit oversold. The Aussies are a bit difficult to read down here, so I wouldn't be overly involved, to be quite honest. A break of 87.30 would be slightly different, and then I think we possibly are headed lower. But the weekly charts are showing some bullish divergence down here, so I wouldn't be getting overly bearish, as I say. The Kiwi, that had a tough time on Friday. Got the kibosh put on it really quite hard. Really it was catching up. Aussie Kiwi, which has come off heavily, got down to 105.40, which was about a 5-year low. But with the weakness in the Kiwi, the cross managed to rebound to 106.30. Overall, I don't think the long-term trend of the Aussie Kiwi has changed, and I think we're probably still heading lower to at least around 104. But as far as the Kiwi is concerned, we broke back below 83 here, and that should now be resistance. And in the short term, at least, I think 82, the figure, should provide some decent support. And for the next couple of days, I'd be looking for some more 82. 83 consolidation, as we saw all the way back here. Maybe that turned out to be a false break, and we are headed lower. The dailies are not really conducive of any. They're not particularly showing. Maybe a little bit more weakness back down to 82, but we're sitting on the 100-day moving average here. The trend support's here at 82, and then we've got the 200-day moving average at 81.5. So the Kiwi's a bit tricky at the moment. As I say, it's still in this choppy phase, and I don't think I'd be too involved. But that's about it today. As I say, we've got the German PPI out, which has been the highlight in Europe and the States. Before then, we've got the Chinese data, so that'll probably be the focus of the day. But it is, as I say, Martin Luther King holiday. So overall, I'd probably expect some more consolidation for the coming day. So that's about it. Have a very good one, and we'll talk to you tomorrow. Cheers.